Okay. So for this week, what I decided I'd do, it's, Monday, March 4th. And this week I decided instead of talking about stocks, instead of talking about bonds or currencies or commodities, I thought I would just go straight to where the March Madness is, and that is Bitcoin and Ethereum. So, any of you that have not opened up Coinbase or turned on CNBC, you're wondering what's going on with Bitcoin. It's up a few thousand from where it was over the weekend. Again, this is amazing. The run we've had in the last 30 days has been nothing short of astounding. Let me take you back to January. All right. All eyes coming out of December. And remember, in December, we went up into almost the mid 40s in anticipation of BlackRock getting SEC approval to trade spot Bitcoin. And they did. And then immediately after that, you got 10 other guys that showed up out of nowhere and said, me too. I want to offer it as well. So there were 11 different investment funds offering a spot ETF for Bitcoin. So here's where we were. We did a little bit of a wiggle because we jumped up in the first week of January. We immediately collapsed down from 48 to about 38 and then rallied back above 40. Look what's happened since February. 42 became 62. And all of a sudden, just today, it really isn't the first day of March. March 1st was Friday, but we were in the low 60s March 1st. Today, we're now trading, and I have this at 66,287. But again, this thing's a moving target. It really is. I mean, it's I've got it at 67,279, so almost 67.3. Let me share a couple things with you. This high up here, 69,000. That was the tippy top high. Somebody paid $69,000 for a Bitcoin that's about to be at break even after 2 years. They're about to be back to break even. In fact, I was reading today that 97% of all Bitcoin wallets are now profitable. Does that mean there's still 3% of the people out there with wallets that bought BTC above the price it's at right now, or at least above the price it's at this morning? Yes, there is. So, I see this, and then I see. So I'm saying to myself, where linearly are we likely to be with that next upswing? Now, I want to share something with you. This was back before really anybody started looking at Bitcoin. 2017. In fact, December of 2017 is when mainstream media really got the first bulge in Bitcoin and said, wow, I can trade this. Before that, you got to go back to 2014, 2014, when it was moving higher. I think it's the end of 2013. We were moving higher, went up to like $1,200, and people saw it, but they couldn't trade it because Coinbase really didn't come on board until 2014. As an exchange that you could buy, sell Bitcoin, Ethereum, and a couple other coins at the time, which has now ballooned out to be several hundred. 20,000 in 2017 became 3,000 by 2019. Then we rallied back up. This is the COVID bump that took it back down to about, I think it was 3,800, 4,000 or so. And then slowly we came out of that COVID mess. Money was getting showered to the public in terms of quantitative easing, almost zero interest rates. Money was cheap. And that's what pushed the stock market higher. And that's what pushed Bitcoin higher as an asset as we went above 10,000. And we rallied all the way to about 62. Now, I'm bringing this up because I want you to see something here. This is important. All right. It's probably important enough where I'm going to remove myself from the picture for a moment. 62 went to 30. So we got cut in, you can call it 62, you can call it 60. We had a 50% drawdown in a matter of a month. And then we hung out for another month or two here before started rallying back up again. Now, what happened here? This was cheap money. Then we had a pullback. What happened at the end of 2021 was this is when you had the funds there were companies that were all vying for a Bitcoin futures ETF, and there were a half a dozen of them that got approved as we went up to 69 before that big tumble down to 18, where we took quite a bit of a haircut off the 69,000 number. Okay, so here we are. We've kind of gone up now. We're approaching that 67.5 area, which was the closing high. We are likely going to touch the closing high today. I mean, it's so close, guys. Bitcoin up 7.5% right now. But anyway, where do we go from here? So I drew a line from 20,000 through the low 60s, high 60s. This thing just keeps on going up. But let me tell you what's interesting. This 87,000 number. Okay, 87,000 is simply taking 69 and adding 18 to it. Okay, 69 plus 18 gets you to 87. But this linear line going up into 2025 tops out somewhere around 109,000. So I want to make sure you knew that. Trendline support, if you take the low number that happened during COVID and attach the 18 to it, then that takes you up to trendline support. Right now, trendline support's around 25. But as we get closer to the end of the year, that's going to be closer to 30,000. So I've got trendline support in 2025 at 30. I've got trendline resistance at 109. And we could go much higher because the slope of this line is actually quite massive, that as we go out farther and farther into 2025, that number could get bigger and bigger. So there you go. All right, that's BTC. Let's take a look at Ethereum. So Ethereum right now is still playing catch up to Bitcoin. You got Bitcoin up 7.5% right now. You got Ethereum up about 3.5%. Eventually, those are you're going to get that rubber band effect where right now Bitcoin's pulling Ethereum, but eventually if Ethereum's going to snap past Bitcoin. And when's that going to happen? I think that's going to happen after we level off a bit, because we will level off with all of these spot ETF products in Bitcoin. Ethereum, there will be a approval on Ethereum because I don't see how they can't be. BlackRock's the one leading the charge on this one, and we know what their win rate is on ETFs. So Ethereum is likely to be approved later this year. They're saying it could happen, within weeks or months. We've got options on all these Bitcoin ETFs that could happen any day. Those will happen. That's also going to help level off Bitcoin, because now you'll have another way to short or go bearish on Bitcoin without going net short on the ETF or net short on the futures and having unlimited risk. Because right now, I think part of the reason why Bitcoin is hitting this 67 half number and will go 68, 69, and I think it's going to blow right past 70 is because there's a lot of folks on the short side of this that are going to give up. They're either going to get margin calls or for whatever reason, they're going to be covering. And that cover is going to take us above 70,000. That's what I see. So Ethereum should be the next alpha dog. Once we get the options in place and once we start to slow down and this thing stops moving so fast. Although I'm not complaining. I can't complain at all on that. But it will slow down, and then Ethereum will take over. And we see Ethereum resistance based on the same thing. I mean, I cannot get a slope here, Jay. I can't take a slope from this high to here because it just it literally goes straight up. So what I got to do is I got to take the 48 plus 9 to the next Ethereum resistance. Once we get above 4,800, which is the all-time highs in Ethereum, 57 is going to be the next area of resistance. Support we've got now at 2,000 support, which was resistance, right? Back in 2021, in 2023, and now, resistance is going to become support. So that's where we see support at 2,000 with Ethereum. All right. The money counter. I want to welcome everybody to March. Let's talk about the money counter for a few minutes, and then I want to show you what I see as a potential trade alert, or not trade alert, but case study for you to check out on your own. So for those of you new to Money Counter is a seasonal calendar. It is a seasonal trading tool that we use. All right, proprietary to us. It looks like a calendar. So what we've done is we've loaded this with the most popular stocks. So we take the most popular stocks, we load them into the counter, and our algorithm's looking for is it is simply looking for stocks that tend to repeat themselves in upside patterns, bullish, or downside patterns, bearish. And it has to happen in a minimum of 10 years, 90% of the time or better. Now, the way these are color coded is all of these stocks that get pushed into the database, the ones that actually have those 90% profitability patterns, upside or downside, we color code all of them. We put them all together. And if it's green, the majority of those patterns are bullish. If it's red or orange, the majority of those patterns are bearish. And if it turns out to be yellow, it's about a mix of 50-50, give or take. All right. When we click on a day, clicking on a day will open that daily window. And that daily window would then give us ideas on potential stock opportunities. So we see the symbols. We also get an idea of the duration. Green means it's a bullish. Red means it's a bearish. The number at the end tells us how long that trade, that trade pattern is in force. These are trading days. Okay. The other thing we get an idea on is the end date on those patterns. We can get an accuracy reading. This shows the last 10 years. We actually have more than 10 years data, and we can run money counter on more than 10 years. But if we take a 10-year calendar, we can get an idea of what is it, how far is it likely to go, how long is it going to likely to take there to get there, and and almost as important, how many times was it right in the last 10 years? We'll get that average profit. So if we're able to take an idea of how long it takes to get there and how far it is likely to go on average, that's exactly what we need to get an idea of a trade. Now, the way we rank these is with something called the power meter. So the power meter is just a way of looking at, for instance, the last 10 years and where has that pattern taken us recently versus where it's taking us over the last 10 years. So whatever this particular pattern was, in 2014, it had a little 14 and 15 little profit. There's a losing year in 2016, then a little more. Then it started gaining more profit on average. And of course, last year in this particular case, gave us the most return. That shows a positive upward slope that the trend is getting better and better. Great. Now that we know that, let's go ahead and talk about the money counter for March. So the money counter for March, this is March 4th. Right now, if you look at March 4th, we have more bearish opportunities than bullish, but that changes course really quickly. By the time we get to Wednesday, it's 63% bullish, 37% bearish. It jumps to 84 over 16 on the 7th. And then every day until you get down here into the middle of March, you get to the middle of March, it's pretty much 50-50 for the 18th, 19th, and 20th. Then we go right back. Look at the 22nd, 99% bull. Look at the 25th, 98, 26, 99, 27, 98, 28, 92. You really start to lean into the majority of these stocks having bullish patterns when we get to that last week of March. So this is actually, even though this is the first full week, this is week 2, this is week 3, because there's your third Friday expiration, week 4, and then what we see as week number 5. So that's what March is stacking up for right now. By the way, the 29th, you might be wondering where the data is for the 29th. 29th is Good Friday. Good Friday markets closed. That's why we don't have anything there for that particular day, because Easter Sunday falls on March 31st. Okay. So I took a look at the 4th and I took a look at the 11th. You know what I'm looking for? I'm looking for something that's popping on the same days. A bullish trade on the 4th and a bullish trade on the 11th. And here's what I got. I got my top 10 trades for today, which is FRC, NOC, NVIDIA is a bull, AMT is a bull. Then you got bearish trades in Goldman Sachs, Netflix, DFS, COG, Anthem is a one-day bull. I don't pay attention to those. And SPLK is an 8-day bear. But then look at March 11th. Lululemon bullish, BlackRock bullish. Here's NVIDIA. Now, NVIDIA comes up as a bull on both, but this is just an 8-day bull. I'd like to see something a little bit bigger, right? So I see NOC. NOC went from a bear Today, it flips over to become a bull next week. There's McDonald's, Microsoft, Synaptics, AMT. There's AMT. Look at AMT. Bullish 30-day, AMT, bullish 27-day. That to me spells some consistency across the month of March. All right, VeriSign and Adobe round out the top 10 for next week. So when I look at this, first thing I did was I said, well, let me see find a bull and a bear. The bull was easy to find, it's AMT, but all the bearish trades are only a couple of weeks. There's nothing wrong with that. But I thought, as of even next week, everything starts to get more bullish. Let me just find something that looks good today and looks good again next week. And that's where we look at AMT. Let's take a look at AMT, and you can see the seasonal details of AMT. So AMT shows a trade from today to April 12th. All right. It shows me that this is a 30-day trade, has 11 points on average profitability, 90%. That means 9 in the last 10 years, this pattern has worked out. It's had, now the 71 max drawdown to max profit's kind of weird, because when you take a look at what it's done, the worst loser was back in 2015. So it closed up with a very, very small piece there. So there was a time where it dropped down and it rallied right back before the pattern was over. But I do like the last 3 years. Combining those together, you get about 20 points movement on this particular pattern. Here's a chart for AMD. And you can get an idea that, even if we went conservative, you've got 215, possibly 220 as your upside target. What I did here is I took the lows that have happened in this chart, which are down here around 160. You got the highs at 218. You got a pullback that really hugged in here at 50%. Now we've climbed out of that, and we've climbed out of that and closed above that, which is now taken successfully in the bullish camp. So this one not only looks like a seasonal bull, but it's pulled back and it looks like a fantastic bull. So in this case here again, folks, what can we do? We can buy the stock. All right. We can definitely buy the stock with an idea that April 12th, we want to be looking at getting out of that stock. The second thing we can do is we could simply look at option strategies. And those are your option traders. You know what you got to do here. You got to go back and look at the pattern. You got to ask yourself those two questions. Number one, what did that pattern do? All right. What did that pattern do between the times of now to April 12th? That's number one. So you got your time. The second thing is, what did it do in terms of price? What have it done on average? Are we looking at that 215 to 220 price target? And can we find an option trade or an option spread that allows us to do that? So there you go. That's the money calendar for today. I wanted to show you the month of March. I want to show you how we actually break down looking at one or in this case, we looked at a trade that starts today, and we looked at a trade that starts next week, both on the same stock.